Good evening, everyone, and welcome to our Core SSG tutorial webinar. My name is Susie Artsberger, and I'll be your host tonight. But our presenter tonight is Ann Cunias, Better Investing's Senior Manager of Education Programs. She is a longtime Better Investing member, volunteer, and staff member, and is involved in developing educational initiatives and programs such as Stock Up, First Cuts, Ticker Talk, and other webinars that help BI members become successful long-term investors. As we go through the presentation, please feel free to use the chat pane to ask your questions. Our talented backroom staff will either respond to you privately or will hold them to ask Ann during the live presentation. So with that, Ann, over to you.
Well, thank you very much, Susie. I am excited to be here and talk about the Core SSG tonight. So let's get started. Before we go into the Core SSG, I do have a little bit of a housekeeping issue to take care of, and that's to tell you our disclaimer. I want to remind all of you that everything we're talking about here is for educational purposes, and we are not making any recommendations to buy, hold, or sell any securities. This is not what we do. Various securities may be held by the instructor, who would be me, and if that's the case, I will mention that as in passing. This presentation may contain, we may visit some various websites or products or services that aren't officially endorsed by Better Investing, and just looking at them or including them in this presentation is not a formal endorsement. As always, we are recording this session and it will be available in the video learning library. And if all goes well, that will be tomorrow. All right. So tonight's webinar is all about the Core SSG. We're going to have an overview and basically an introduction to this stock analysis tool. And most of the time that we're going to be spending here together, I will be demonstrating live how to complete a stock selection guide, or SSG, using Core SSG. Then we'll also review some of the other useful features in the tool, such as how to save, share, and update an SSG. Now, the primary focus tonight is how to navigate and use the tool, the Core SSG. I am assuming that you in the audience have some previous knowledge and a little bit of exposure to the SSG, and maybe a basic understanding of the methodology. Now, if this is not the case for you, I'm going to direct you to our video learning library, where you can find many helpful resources. And I would suggest that you start with the introduction to the SSG series of classes, and that will help you create a really solid foundation. As Susie mentioned, please do submit your questions. We will be monitoring those and we'll answer just as many as we have time to in the course of this presentation. Now, we have several handouts that are included in this webinar. They're in your panel and they will be posted also with the video. We have our quick start guide, which is really a great tool that you can reference, especially if you are a brand new user to the Core SSG tool. And I assume that's why many of you are here tonight. It takes you through the guide, the SSG, completing it in the core in 16 steps, and we've included that in your handout. Now, we have another file in your handout section that's called Core SSG Reference Slides, and that contains many annotated images or screenshots of the Core SSG. Now, we're not going to be stepping through that tonight as a PowerPoint presentation because, as I said, this is a live demonstration. But that document really does highlight a lot of the features that we'll be looking at and demonstrating. And you might find it helpful to have it by your side as you're trying to complete your own first SSGs using Core. I've also included the SSG guidelines for beginners. This is a document that outlines what we want to look for in a high quality growth company and offers just some very basic SSG judgment guidelines. And if you're one of our newest investors out there, you might find that to be very, very helpful. All right, so with that, let's look at how we might access this tool. We're accessing it right from our member homepage. You can see we're on the homepage. It's welcoming me. I'm known as Smart Investor, not really, but so it's welcoming me. I'm pointing you to the box here that I've just circled, and it's called Online Tools. There's other ways. This is an easy way to access the tools. This is the way I typically come in. So if you have a new ticker, a new company you would like to do an SSG on, you simply enter the ticker or the company name, click on Go, and it will take you there. If you do that, this is what you will see. This is the first screen, the first display that you see in the Core SSG when you first open it. Now, I do want to take a little segue here and tell people that if you are an SSG Plus subscriber, you have access to both SSG Plus and Core SSG. And you'll know you're a Plus subscriber because you'll see this little switch tools indicator up here at the top of your screen. So if you're trying to follow along with this Core SSG tutorial and your screen is not looking like this screen, just switch it over and select the radio button next to Core SSG. You can flip back and forth. Now, of course, if you're a Core SSG only subscriber, that's great. You just don't see this little switch tools buttons there. So I just wanted to clear that up because some people say, hey, I don't see what you're seeing. But there you have it. All right, so let's look at the lay of the land here on the display. Many of the displays are set up the same, so we're going to go through this on the very first. So very often there's a single piece of data that is being presented on in the Core SSG. In this case, we're looking at historical sales. You're going to get a graphical display of the historical data. Okay, this is all historical data over 10 years. Down below the graph, you're going to get a tabular display. So you can see that same information in numeric form as opposed to graph. On the right-hand side, we've got a panel that's labeled education. And there, if you're brand new, that's a short little education piece, what it says right there. It introduces you to whatever element we're looking at, whatever item. Like right now we're looking at historical sales. It kind of tells you what you're looking at, why you're looking at that. It's not going to give you any in-depth information, but it does give you a high-level overview. Next, we have a legend over on that side where you can control what you're going to view on the graph. You can add peers, and we're going to talk about that in a little bit more, but that's where you would control turning on and off the various things on the graph. We have some menu items at the top. We will cover a few of the frequently used ones, but you know, there's obvious ones like print and file and various things, but we'll talk about a few of those as we get through our process here. And then at the very top, I'm going to point out our navigation, which is a step-by-step navigation. This is part of the beauty of the Core SSG. It really leads the new user step by step through the process, helping them understand and learn the process as they complete a stock selection guide. So the navigation is easy. We've got tabs across the top here, and you can see the first one is Analyze Growth, and it's green. That's where we start. Underneath each one of these tabs, notice that there are steps that have to be completed. So for analyzed growth, there's 3 steps. The one that's in green is what we're looking at right now. This is our active step. We're looking at historical sales. We would then step through, and after we're done considering sales, we would look at our earnings, our historical price review, and then we would move on to the next tab, which is our evaluate management. That has some different steps underneath. And the thing is that you just complete each step in each tab in succession, and you will complete an SSG. So I'm not going to dwell on that. We do have this handy little back and next buttons here to help you just go forward or back through the process. I'll demonstrate it when we're live, but you can access them by just clicking on the tabs. You can kind of navigate anywhere around. But if you're new, it's very helpful just to go through the sequence of steps that we have identified here and do it in the order that we have presented it. So that's a basic lay of the land. Next, we are going to go live to the stock selection guide. And I am bringing over my browser right here. And so here I am, and I am logged in. There is my name. I am logged in. And so this is my home page. There's my box. The ticker, the company that we are going to look at tonight is Alphabet. This was the undervalued stock in the recent magazine, one of the undervalued stocks in the June, July issue of the magazine. So I thought, why not? We'll do that one. The ticker is GOOG. I put the ticker in, verify that, yes, and I click on go. That opens up the tool in a new browser window. And here we are, right where I said at step one of analyzed growth, which is historical sales. All right, so what are we looking at here? Really, there's nothing to do here except analyze our data. We are looking at the 10-year history for this company of their sales growth from 2015 to 2024. There are 10 data points. These are annual numbers that are presented. Here is the underlying data down below. What was I going to say? Oh, I know what I was going to say. So we have our data points, see, and they all are connected. We have a line that is underneath this whole line. That is our trend line. That is our line that best fits all of our data, okay? So we measure the growth of that trend line to get an average level of growth over the past 10 years. And we see that called down here as the growth rate. So for our 10 years of historical sales, we have our growth rate of 19.3%. That represents basically the growth or the slope, if you remember that term from, what's that, geometry, I guess, way back in the day. And that's what that is, the growth of that trend line. Oh, now I wanted to point out that if you're not familiar with what Alphabet does, I think most of us are. We've heard of Alphabet. It's quite a large company. If you hover over the company name in the tool, you get a lot of great information, including a nice description. So if it's a company that you're not familiar with, be sure to hover there and just read a very short description, and it can give you an idea. It also indicates what sector, what industry it is, what is the company size, as how we evaluate it in Better Investing by sales. So this is a large company because they have more than $10 billion worth in sales in a single year. Actually, in the most recent year, they had 350 billion. Yes, because these are millions. This is in millions, so that is $350 billion worth in sales. So this is a very large company. All right. All right, so I pointed out that we have our annual data here. Oh, and notice how when I hover and put my cursor over these, this is what we call an active graph. So it's displaying the data. If you look at 2021, where my cursor is right now, if you look at the table below, you'll see it's the very same number. So that's what that is. Out on the end here, we have a circle that is not filled in. That's the most recent quarterly figure. So in the first quarter of 2025, they have reported, and we see what the sales was for that particular year. If I scroll down just a little bit, I can see that it measures the recent quarterly growth of that quarter, the first quarter of 2025, as compared to the first quarter of 2024. And when we do that, we see that that was a 12% growth. All right, so we have 19% growth on the overall 10-year sales growth. But I'm making an observation. Sometimes we want to measure not all of the data, the growth of all of the data. And what I'm seeing here is there was one growth rate for maybe the first 6-ish years on this chart. And then recently the growth has been a little bit flatter. So if I wanted to measure what the most recent growth was, because I do, because the 19%, if you look, the slope of this line is a little higher than the growth rate that we might see in this most recent 4 years. You can remove data. We call these outliers, or just removing the irrelevant data. I want to measure the growth of this past 4 years. So I'm going to click on these years, and that removes them. See, it took that, put a line through it, redrew the trend line, recalculated the growth rate. Now it's 18.9. I'm going to continue to do that until I like the fit on those last 4 numbers, data points. Beautiful. This growth rate here seems to really well represent my last 4 data points, I would say. And that is not 19%. That is a 10.5% growth rate. There's nothing wrong with that 10.5% growth rate, but I'm pointing out that you need that information to make a fully informed decision about what the growth may be going forward. The most recent growth is important. So that is outliers. And for the sake of science, I'm going to put them back in and look at, I'm just clicking. I will point out that you can also click right on the cell in the table. Either way, both ways work. So I'm just putting those back in, and now we see our growth rate is back to 19. But I'm going to remember that 10% for the most recent recent 4 years, excuse me. Let's talk a little bit about peers, okay? Because in this legend, we can compare our company to others, competitors, peers, whatever. Now, the system has selected Meta, the computer, our programming, has selected Meta, Spotify, I guess that is, and another Meta, Toronto. I'm going to point out that if you're not sure what those are, because that's just the tickers, notice these little arrows, open, close, data. Whenever you see these, that means, oh, I could open that and I could reveal a little bit more data. So I open that up and I can see, oh, I can see the full names of the companies. So I've got Meta in there twice. I've got Spotify. I don't know that that's such a great peer or competitor to consider. But I will tell you that the peers, as I said, are automatically selected, and we have a few rules in place. And I'm going to point out that the rules are that the peers must be in the same industry as the company under study. So let's remind ourselves what that was. Internet content and information is the industry of Alphabet. So these are also in that same industry. They have to be in the same size category. So Alphabet, excuse me, is large. So we're looking for other large companies. Meta is also very large. Spotify is more than 10 billion in sales. It is large, but it's not nearly as large. And frankly, that's a music streaming service, I believe. I don't know that they compete all that well. So I'm going to change these. And you see this button? You can change it to be anything you want. You don't have to stick with the pre-selected peers. So I'm going to click on that. And first of all, let me just point something out. When I clicked on the Meta Toronto, notice that it just kind of overwrite it. They're color coded. So the regular Meta in the US is green. When I click this one on, it overwrites it completely. So the data is the same. I think I'm going to get rid of that Toronto one, and I think I'm also going to get rid of Spotify. You don't have to have 3 peers. Sometimes it's hard to find peers, but I'm going to delete this. I don't think Spotify is worthy. And I'm going to change this to, well, Microsoft. Now, why wasn't Microsoft there? Microsoft is a completely different, in a completely different sector and industry. It's in a technology sector as opposed to the communication services sector. However, they do compete on a number of levels with Google. So I thought, or Alphabet, I thought that would be a better comparison. So we see Microsoft is out on the chart as well, and we can compare those growth rates, point that out here, with our company under study. So I see that Meta has a little bit stronger growth, at least over all 10 years, and Microsoft a little bit less. All right. That is all I've got there. Let's move on to step number 2, which is to evaluate our historical earnings per share. I will say, and I didn't say it before, Google Alphabet, it looks outstanding as far as the stability and the consistency of the growth. This is, a very straight line that indicates consistency, even though there is a bit of a slowdown. That's a good thing. Let's look at the historical earnings per share. Oh, I just clicked right there. But let me just show you. Either way, I can go to next, back, next, or I can click on the items. All right, so here we are looking at 10 years of historical earnings per share. Same thing, 10 years, these are our annual numbers. That's our trend line that is the best fit for all of the numbers. That's our most recent quarterly figure. Here is our 10-year growth rate, and here is our most recent quarterly growth of earnings per share as compared to the quarter 1 year ago. I can compare that to my competitors, click those on and off. I can open that up and evaluate that. This is a very useful feature because why? We want to select one of the very best companies of a group that we can. So it's very handy to be able to compare right on the same graph the fundamental numbers, like right now, sales, earnings, and we'll look at others for these various competitors. All right, so outliers. I'm going to turn these off for now, just to clean up my graph a little bit. Outliers, shoot, my trend line seems to fit pretty well. One could argue that, well, and 2017 looks a little off and 2021 looks a little off. Let's remove those. I don't even know what will happen. This is 26.4. It's going to change it a tad, but it's not going to change it a lot. If I only took off that one, it did. And if I take off both of those, I don't even remember what I said was the other one. 20, what was it? It, I'm gonna put it back. 23. Okay, it went down just a tad, a little tiny bit. Oh, I didn't take it off. 26. It went down a little tiny bit once I removed those. Do I think that's a better fit? Probably, probably. Um, but 26, 23, they're all in the same ballpark. It looks very, very good to me. Everything else, I don't think there's anything else to look at here. It's basically the same layout and the same thing. We're just considering history. Again, the straightness of that line, yeah, there's some bumps and that kind of thing, but overall, this is outstanding quality that we are looking at. We want the growth to be going up, and we want it to be going up in a fairly consistent manner. All right, let's move on to the next step, which is looking at the historical stock price review. And here we kind of put all of our fundamentals together, at least our sales and our earnings, on one chart. So I like this because I can see the sales, I can see the earnings, and there are my price bars. That's what these I bars, we call them. That's what these are. It indicates the high and low prices for those particular years. And then this one that is sticking out here is the 52-week high and low. And you can see that. I know it's a little bit hard to see. And the red tick indicates what the current price is. Okay, so you can kind of see where is the current price in relation to where it's been over the last 52 weeks. Um, but really what we're looking at on this chart is I love to see my sales and my earnings be going up and parallel to each other. That's great. And I also like to see that my price bars are more or less moving in tandem with those. As sales and earnings goes up, so does the price in general. All right. Let me pause here briefly and see if there are any questions that I can address at this time before we move on to our second tab.
And we do not have
Yes.
any questions.
Oh, all
They're
right.
being handled
All
valiantly,
right. All
successfully,
right.
and accurately
Wonderful.
by our
Well,
background
you
staff.
you stick with me, guys, and if you do have a question, please put it in there because I want to make sure that, you have good understanding as we go through this. All right. So we're done with the 3 steps in the first tab. Let's move on to next, which takes us right to that second Evaluate Management tab. And here we see we have 4 steps to complete. And the first one is to look at our pre-tax profit on sales. And that is also known as profit margin. Basically, it's telling us how many pennies uh, worth of profit does Alphabet make on $1 worth of sales. And yes, it's kind of been up and down. I will point out that this graph is automatically scaled to fit all of the data so that you can really see it. So sometimes it looks bumpier than it is, although in this case it's a little bumpy. It went from like in the mid 20s back in here to 35% profitability or percent pre-tax profit on sales, back down to its more normal level, back up again, and in the most recent quarter, uh, even more. So overall, these look like very good numbers. I do always like to consider what my competitors are doing. Now, again, remember, Google, Alphabet doesn't have a direct competitor. There's just too much going on. Microsoft competes with them on some levels. Meta competes with them on other levels, but they're not quite comparable. So keep that in mind as you're going through this. I see Microsoft has some very nice profit margins and a little steadier too, perhaps, especially in the most recent year. Meta is kind of showcasing a similar pattern to what we saw with Alphabet, where we had a drop in 2022 and then a big rebound. But all of these look pretty good, and I would be uh, pretty satisfied with Google, or I keep calling it Google. Old habits die hard, guys. It used to be Google, now it's Alphabet. Um, yeah, this looks good. I have no issues with it. Overall, the trend is up. If the trend is up or even, I'm happy. Okay, even if it was a perfectly flat line, as long as it's not going down. I don't want to see a big, steady decline in the profit margin. All right, so looks good. I think that gets a check mark because right now, all we're doing in these first two steps, and first two tabs, I should say, is to evaluate history and try to identify a high quality growth company. Return on equity is our next step. Evaluate that. And this is basically telling us that this company is earning um, on its own equity. It's using its equity to make more money. That's what we want. I love this. This pattern is great. It's a rising pattern. You don't always see that. Again, if the return on equity is even, that's great. Um, and also we have some metrics there that we like to see at least a 15% return on equity on average for a good quality company, and an excellent quality company often has a return on equity in excess of 20%. You can see what the numbers are here. And in the most recent 5 years, the average is called out here of 26%. And it's been right around there. That looks very, very good to me. So again, if I checked Meta and I checked Microsoft, all these guys are looking pretty good. So yeah, I'd take any of them. All right, that is return on equity. Let's move on to the next step, which is titled total debt. Now, this again is our annual data called out here, 10 years worth. You can see the numbers down here. It does give us an average number, but this is telling me what the total debt is in the company. I see that it had a big increase between 2018 and 2020, smaller increase and up till 2022. And in the most recent year, the debt has been coming back down. I like debt that is coming back down. But what I don't know, and I can throw some of these other ones up here too, just to get an idea, this tells me nothing though, other than the trend. It does help me identify the trend of, are they taking on more debt or are they not? But it doesn't tell me, is it too much debt? I don't know. It's a number. I need to put that in context of something. And that is what the next step does. So I look at this step, but I to identify a trend maybe, and that's about it. I quickly move on to step 4, which is putting debt as a percentage of the capital. And here we do have a metric. We generally like to see our companies to have less than about a third of debt to capital, 33%, 30 to 35%, somewhere in there. If it gets much more than that, there's some caution to deal with. So while we saw that Alphabet had some high numbers in debt, what I'm seeing here in percent debt to capital is debt is not an issue for them. These are very low numbers. These are all under 10%. The last 5-year average is 9.5%. This looks like they can handle their debt very, very well. And we can compare that to Meta and we can compare that to Microsoft. And you can see that both of them, as a percentage of the capital, are higher. None of these are in a danger zone as I hover over some of these numbers, and I can also see them by revealing the little triangle down there, opening that up. But Alphabet is the lowest. I like companies that don't have a lot of debt. So in this case, Alphabet does look like maybe the best one.
Mhm.
So I've looked through the first two tabs. I have evaluated this for quality, growth. I say, yeah, this looks great. We should continue our study. And I'll pause here, Susie, and see if we have any questions that need to be addressed.
Yes, we do. We have one question that came up during the Evaluate Management segment from Norma, who asks, is there a reason that you don't look at industry average as a basis of comparison in at least a couple of these charts?
Yeah, there is. There is because I'll tell you my rationale. I rarely use those industry averages. You could chime in too, Susie, if you differ. But because the industry average, it contains lots of companies, and it it's just it, bad ones, really bad ones. I just really want to consider the good companies that I have identified. So if you look at the industry average, you see that, well, yeah, it is quite a bit higher in this case. Peer group average is right up there too. And peer group, by the way, is, you might have to help me on this one, Susie. I was going to say, I'm not sure what the peer group average is. I know it's
It,
from the pre-selected peers that we
no, it's
had.
not
Oh,
actually.
oh,
It's all a peer group we call is all companies in the same industry and of the same size.
okay. So it's
So
all
the
of those peers, not
right,
just
but
the top three earners or
so
whatever.
they're sales weighted though, and which means larger companies tend to
Make
take
it more.
over these industry averages. But it is part of my methodology. I quickly look and see, the comparison to the
Yeah,
industry average. But I do look at, like you do, I turn on every peer as well as the one, under study and see how it looks compared to the peers that are on
yeah,
there.
yeah, yeah. Good point. I'm just not in the habit of it, but check it. I mean, industry average. That's, I assume, the uh it would be the entire industry, not just the ones of the same size,
Correct.
Susie? Yes, okay.
Correct.
And the peer group
All
is in the
companies
same,
in the industry.
all companies in the industry. And this is of the same size. So, and that's why they're pretty similar, because those large companies take over all the numbers. So,
Yep.
all right. But yeah, I didn't focus on that. And that's just a personal preference. But frankly, I'm kind of like Susie. I might flip it on just to say, oh yeah, my company's so much better than the industry. Boom, I'm done. So, all right.
Right.
Anything else before we move on to forecasting?
Can you please repeat the percent of debt to equity that we desire to have?
Yeah, it's actually debt to equity is a little bit different metric. We do debt to capital, uh, and we like that to be about a third, 33%. Think one third.
Right.
Okay,
Okay. Thank you.
you
That's
are
it.
welcome. All right, so quality. I in my mind have a big check mark on this. I think yes, this looks good, and we're gonna move on. Heck, it was in the magazine. It's got to be good. Okay, so here we are forecasting our sales and our earnings. Step one. There's two steps in this, and we're starting with step number one, and that is sales. So, what do we notice about this? Well, first of all, I'll point out that this looks very familiar. This is what we just looked at in step one of analyze growth, except that we have now added 5 more years onto our chart because we're trying to look 5 years into the future. Here's again our numbers, our historical growth rate to remind us what that is, or yes, what it was over the past 10 years. We have some data on here that I want to point out. As part of our data feed, not only do we get the fundamental historical data supplied by Morningstar, I haven't mentioned that as yet, all of this data. I haven't put this in. You saw me. I just put in a brand new SSG and boom, it gets populated with 10 years worth of data. That comes from Morningstar to us. And along with that data, we get some estimates. And here it is called out for sales. We get a 2-year estimate for sales growth and the analyst consensus estimate, and that means the analysts that have submitted their estimates to Morningstar. They're all averaged together, and we get that number. That's a 9.5% sales growth estimate, analyst consensus estimate. That's one source of information. So right now we have our history, 10 years, 19%. Remember what that 4-year was? That was about 10%. We've got a 2-year future estimate of 9.5%. This little short line here, that's a graphical representation of that 9.5% growth rate. So, and you can see if you can read that there, I know it's very, very small. And so that's giving us some information there. I will also point out that research is needed when you're doing this. You're not going to want to just rely on this number or just rely on history. I mean, those are great starting points. And this isn't a class about research. We have others that you can reference, but I do want to point out that through our research menu item, we have a lot of information that you can access. And I'm just going to show you that for analyst estimates, you can see that we have a number of websites to go to. And just quickly, I'm going to demonstrate. I'm going to go to Zacks. And you'll notice that it opened in a brand new tab. So I still have my study over here and it's not disrupted. And I can go to Zacks. And I know that if I look down here to the sales estimates, they put a current year estimate and a next year estimate. So between 12.2 and 10.5, that's somewhere around 11-ish percent over the next 11 point something over the next 2 years. So I've got about 11 and 9.5. I would suggest checking more than just one of those, but that's, I just wanted to point out that those research links are right there at your fingertips, and I encourage you to check them out. All right, so for my money, I am using some median values from more than 400 stock studies that have been done by our members over the last 90 days. I'm just going to do that. My like-minded investors, they all tell me that the median that they've been putting in recently is 10%. I'm going to go with 10%. I put in that number in this box where it's asking me to put in my sales growth rate forecast. And then I'm going to update my study. Now watch this line. This is no growth. I haven't put in my growth yet. This dotted line is my projected growth of sales. I'm going to update that study. And there it is. That's my 10% growth over the next 5 years, which should result in about $579 billion worth of sales, which they say it says right down here as well. One other thing I want to point out before I leave this screen, and that is to consider the projection starting point. We're projecting from a point of history into the future, and we're trying to project 5 years. We have 3 selections. You can go from the most recent annual data, you can go from the most recent quarterly data, or you can go from the end of the trend line, and that would be your adjusted trend line if you did take some outliers or what have you. It makes a difference. So let's just see. It said 579. Let's just see, since it's only one quarter, it's not going to make a huge difference. But let's just say I want to start my projection instead of from the quarterly number, from the annual number. Well, it kind of moved everything back. Uh, Now it's not 579, but it's 563 billion dollars in the future sales. Why? Well, when you go from the most recent quarter, you are actually crediting the company for all of the historical growth that it has achieved. If you only go from the annual, you're discounting that growth and you're really not going to project a full 5 years in the future. Notice that when I hover my cursor here, it's saying that, oh, yeah, in the first quarter of 2023, we project $579 billion worth of sales. If I change that back to annual, it's telling me, oh, yeah, at the end of the year 2029, fourth quarter 2029, I would have my $563 billion worth of sales. So, for the most part, I and most people I know who use this SSG, and if you're looking at a high quality growth company, we start our projections at the quarter. And frankly, that is the default. If that's the first time you're coming in to use this, it'll be set to that, but you can change it and it would save that with your study if you so choose. All right, I did update my study because I have a new sales growth forecast there. Let's move on and do the same thing for our forecast earnings. Here again, we have the same earnings annual data there. There's our quarterly data. Uh, Now, in this case, our analyst consensus estimate is a longer term estimate. It's 5 years as opposed to just the 2 years. Long-term estimates are tough to find for sales. They're a little bit more available for earnings per share. The Morningstar analyst consensus estimate from a number of analysts, as I said before, is 15.3%. Again, I would encourage you to use that research link and check out some of the other ones. In fact, I still have Zacks open, so I happen to know that the next 5 years, oh, they're pretty much in agreement with Morningstar about 14.9. Okay, so again, that's a couple of sources, and I always like to use at least three. I throw that number out there. Check at least three sources. Okay, so I'm assuming that you've done your due diligence, you have done your homework, and I am going to use the median from those more than 400 studies, and I'm looking that up, and that was 11.4. A little bit more conservative, our group is, and that's just fine. So again, the dotted line, that's my current projection. I don't have one yet. And here is, I'm updating it, and boom, there it is. And so in 5 years, if I project from the most recent quarter, I expect $15.39 of earnings 5 years in the future. And that's it. We have made our future forecasts, and we are ready to move on and look at our assessing risk and reward. But I will stop, Susie,
Thank
and
you.
let you ask a question.
We've had two people ask about where are you getting these numbers from the community, and I've pointed them. I
All right,
understand that we don't
I will
have a
show.
ton of time, but
We don't have a ton of time, but it's easy, guys. The place I got that is this tab here. One of these auxiliary tabs that I said isn't really part of the process, but that's where I got it. It's called Member Sentiment, and I am using, and you can see that I'm not going to go into all the details on this page, but I'm using 427 studies. And you can see there's my sales that I use. Here's my earnings per share, median value, 11.4. And that's where I'm going to get the other forecasts that I need to make. That's where they come from. And these are all the completed studies by our members, anonymously, of course, that have been completed over the last 90 days, and also that fall within um, a standard deviation. I'm not even sure. Oh, there's question marks. We removed we removed some of the data because some of it seems too out of bounds. So by doing that,
Right.
but I actually looked at that and they were really close. If I included them or didn't include them, isn't that interesting? So so
Yeah.
it
Yeah.
hardly
Well,
made any difference.
thank you.
All right. Anyway, so that's the source, and that's where I got it, guys. Um, yeah. Okay. No secrets here. All right. So we updated that study, and we are ready, if that's the last question, to move on to assess risk and reward. Now it is at this point where we're setting our high and our low prices. Okay. So here we are. What are we looking at? Well, we are looking at historical high PE numbers. That's what this graph represents. It's labeled right here. And you can see that, well, the PEs have been, very high back in 2017, but lately, and then in the past 5 years, they've averaged around 28. They've simmered down a little bit. That looks great. Again, I will point out that you can take outliers here. Like if you wanted to see, well, what would the 5-year average be if I were to take out that highest number? Well, that would make it go down to 27. And you can see that the number is removed. Yeah, so you're going to look at this information and evaluate it, make your own best judgments. 28.4. I have to look and see what my friends took. Okay, they were right in the ballpark, but my 400 plus studies on not average, but the median is 25.7. Okay, that is what I'm going to use for my high PE forecast. I think that seems reasonable. It's right in the range, maybe at the lower end, but in the most recent couple years, it's been coming down a bit. I'm looking at the current PE. This is some other useful information that you can use to kind of measure where the valuation is right now. Right now, it's around 20. Um, the overall 5-year average high, 28.4. The overall average, the average high, the average of the average high and the average low, got that, is 22.4. So we're right in the ballpark. I think that's a fine number, 25.7. We multiply that times our high earnings per share forecast, which we just projected with our, I have to look it up, 11.4% earnings per share growth rate. Remember on the previous screen, that was what we said 5 years in the future. If I hit my tab or return tab, something, yes, anything, it will calculate my number, multiplies those two together. I see that my high price is estimated to be $395 in 5 years. Nice. All right, that's it. That's all we have to do here. We've established a high price. We're going to go, oh, I need to hit update study. That's very important. If you don't do that, it will remind you on the next couple screens. So I'm going to update my study to make sure it remembers that I want that high stock price. And now we're going to do the same thing on the low. I'll click on that just to show you I can. All right, kind of the same pattern. It was high and then it's been coming down and kind of stabilizing here in the most recent few years. I see my 5-year average is 16.4. Okay. I am going to use, well, guess what? I'm going to use 16.4. That's what that's what the consensus was with our members. The median number was 16.4. I will tab that over, multiply that times our low earnings per share forecast, which what is that? Where did that come from? I may not have made as big of a deal as I needed to, but that is our most recent 4 quarters of earnings per share. In fact, I'm going to go back. Does it show it on this screen? I don't know. Maybe not. I'm going to go back to here. I've lost all hoverability. All right, well, let's refresh, see what happens. I'm not sure why I can't hover and see numbers. I'm assuming I'm still online. You guys can still hear me?
Yes, you're
Yes,
fine.
I hear you. Yeah, my thing is just circling, so I'm wondering what's going on. I thought maybe I lost my internet, which would be par for the course. There we go. Here we go. So, um, if you hover, this is what I wanted to point out. This is telling me what the trailing 12 months or the total of the last 4 quarters of earnings has been. Notice that this is a different number than just the single quarter. So this is the total, like 1 year's worth, but it's the most recent 4 quarters. That's what we use as our lowest earnings per share because why? We're looking at a growth company and we don't anticipate them ever to make less earnings than they are making right now. All right, so let's go back to assess risk and reward. We were in number 2, and I guess it didn't remember that because I didn't update it yet. So I'll put that back in, and that's where that $8.97 came from. Now, if you don't like that number, you do have the ability to change it to be something else. But typically, I just leave that alone and I let it update every quarter to a new low earnings per share forecast. If I'm looking at a high quality growth stock, that is a reasonable thing to do. Okay, so that comes out with a low stock price of $147. I'm comparing that to the current price of about 180, and we put this number out here. It's a reference. 80% of the current price is $143. Personally, I like to have my forecast low price be at no higher than 80% of the current price, sometimes 75 or 70%. I mean, it just depends. But that's kind of my maximum. This is pretty close. I don't know that I would worry a lot about it. But yeah, knowing me, I probably would. So I did say I was going to take all those. Let's just see if I lowered this to just 16 and get rid of that decimal point. I just, yeah, I can come up with just a little bit more reasonable. 16 is still reasonable. So as you can see, you can change that number to come up with what you feel is a reasonable low price. I'll just take that one. Now, I'll also point out that you have a couple of other options here, a really infinite number of options. We give you some reference data. We tell you the recent market low, and the recent market low is actually from the last 2 years. So it looks at the low prices in the 2 years ago, 1 year ago, or in the 2024 and 2023 years, and then also the 52-week low, which is actually quite close to my forecast low price. So you could select something else from there. You can pick your own number and put it in here. So you said, oh, I think about 120 would be good. That's fine. You can put it in. But for my money, I usually do use this selection that takes the low PE forecast times the low earnings per share forecast to get me a low price. And if it comes out to be an unreasonable low price, I tend to make adjustments to the PE. Not always, but in most cases. All right, so I'm going to update my study. I've established a low price. Done. Let's move on and assess our current stock price and how it compares to the range that we just set up. So there's our high price that we established, our 395. There's our 143 at the bottom. There in the middle, right there, 178 in the green, is indicating the current price. This is telling us our zoning. And this is telling me that, well, according to the judgments, the forecast that I have made on this SSG, this stock is currently in the buy range. And you can see the breakdown of the buy ranges and how low and how high they go. They're going to go as low as your forecast low price. And then the top of the buy zone will be calculated by the computer. And it tells you how that is done right here if you're interested. All right, we have one more little metric to look at, and that is our upside downside ratio. And here again, we're looking for at least a 3-to-1 upside to downside ratio. So we want our upside to be 3 times greater than our downside risk, our upside potential. And yeah, 6-to-1 is good. It's good. It's meeting all of our metrics that we like to see. So this is looking very good. I'm going to move on to our next tab, which is our determine 5-year potential. There's a single step in this one. It's just, that's it, one step. And this graph, what are we looking at here? That's a funny graph. Well, we're looking at historical percent payout. This is in relation to how much has the company paid as a dividend? How much of their earnings have they paid out to their shareholders as a dividend? And if you look here at the data that is underneath here, Alphabet did not have a dividend until very, very recently. They just implemented or instituted a dividend. It's brand new. It's currently a payout ratio of 7.5%. I have no idea if they're going to keep that. Often when it's a brand new dividend policy, the dividend changes a little bit over time until the board decides that, okay, we are at the point where we want to be. By default, this is filled in for you. This is one of the items that is a judgment item, and we call it a minor judgment item. It generally doesn't have a huge effect on the results. It takes the 5-year average and puts it in there. I could adjust that if I like. Not having any other data and using my 400 stock studies, they also like 7.5%. So right now, we're going with 7.5%. And we'll update that study. And then all we're doing here is we are evaluating our total return because we have made all of our forecasts. We have evaluated everything. And according to the SSG we completed with the judgments we put in, our potential price appreciation would be 17.2%. That dividend is very, very small. It's expected to give us a boost of 0.3% yield in the next 5 years. Current yield is 0.5%. So it's not a big dividend payer, at least not at the present time. But the total is adding those two items together, the price appreciation plus the contribution from the dividend yield, and we get our 17.5%. Sounds good. That is complete. We are done. We have completed our SSG. At this point, I'm noticing that I like this SSG. Maybe I would like to save it. And I'm noticing that this big yellow box here is telling me I haven't saved this. You better click on here to save it. So I will. I'm going to save this. It's today's date. I'm just going to put CoreSSG on here so I remember that this was part of the tutorial class, and I'm going to save that. Perfect. Oh, I'm also going to point out, and maybe it goes without saying, if you have a company that doesn't pay a dividend, this will be a completely flat line of zeros, all zeros, and the total return will just be what the price appreciation is. But hopefully that's fairly obvious. And this might be a good example to show that because it was zero for so long until they issued one. All right, so we have saved by clicking on that yellow box, and now it will be in my my collection of studies. I might want to print this. Maybe I'm going to my club meeting and I wanna talk about this and I wanna pass out or I wanna have a copy to reference. Well, that's this print menu item that I just clicked on up at the top. That opens up a window here and you have an option of what exactly you want to share. You can share the huh. Do we not have the PDF on here anymore, Susie? That's no longer an option to send
That
that?
is the two-page stock selection guide option. The
Yeah,
first one you're selecting. That's the
I know.
PDF.
But where I share the actual study with my
You're
oh,
not
never
sharing
mind.
here,
I'm
you're
not
printing.
sharing. I'm sorry, guys. I'm getting ahead of myself. Yes, this is what I want. I'm going to generate my PDF. I'm sorry. I'm confused. It's been a long day. All right, takes a second. There it is. It says open this file. And this is what it looks like. It looks a little bit different in the printed format, so it all fits into pages, but you can see, huh, somebody else's name is on there. Okay. You can see that we have all the same data. There's our sales, there's our earnings, there's our historical growth rates, there's our projected. Wow, that is not what I put in. I gotta go check something, guys. What forecast 11.4. All right. I'm sorry. I don't know what's going on. So sorry. I'm going to try that again. Okay. Take two. Hmm, this one's better. Has prepared by BI on it. Oh yeah, this one. I don't know what happened that last time. It was very odd. All right. Well, this is the same information. Sorry, guys. A little segue. There's our evaluate management where we looked at our profit margins, return on equity, debt to capital. There's our PEs. Here's where we establish our high and our low prices. And we have a summary of our 5-year potential. And if you like, you can just save that right to your computer, print it out, send it to somebody, whatever you would like. Okay. All right. There is another item, and I do want to talk about this because obviously I got ahead of myself. Let's say you wanted to share this with your club members or your partner in investing crime. Under file, share study. This is where I was a little bit confused. Okay, so I'm going to select my items to share. I want to select a copy of the online study. Notice the recipient must have access to CoreSSG or SSG Plus to be able to access this. Uh, and this is what I was looking for. I said, and you can also add, not notes, the stock selection guide in a PDF format, which is just what we looked at in the printout. Okay, so let's say I wanted to send all of those to my club members. I'm going to go in here, select my recipients. I'm not going to talk about how you split these up, but I'm going to send one to Susie because she's my good best friend and she's going to get a copy of this. Yeah, send me a copy too. I don't know why you can. You can add a personal message, say, hey, I'm going to present this at the next investment club. Check it out, share study. And then you're going to get an email that, am I going to get it? Well, it's going to have a link in it. If you look at that in those reference slides that I have, it has an example of what you will see when you get your email. But it's as easy as that. Just share that study. One more item, I think. Do I have time? No, but I'm going to do it anyway. I am going, not search, I'm going to my stock studies, which is hitting on this little folder icon. I went to the wrong place first. The folder, this is containing all of my stock studies and my portfolios, which we're not going to get into today. And I am, let's see, it was a long time ago, but let's see, I'm going to update the study that I did last time for ResMed, and it was on 12/14. I know it's this one. All right, so this was the study that we did a year and a half ago, the last time we did one of these. And I'm just going to point out here, I'm just checking. I had an 8% sales growth rate, and I had a 9% earnings growth rate, and my total return was around 13%, all based on data at that time, 11/14. But this data is stale. But let's say I still like this SSG. I think the judgments, the forecasts are still reasonable. I want to update my data. Well, I go here to the data menu item. Down here, refresh study data. I click on that. It's alerting me that the price is more than 7 days old. I can overwrite this, which I would recommend if it's something that you're continuing to track. And I'm just going to do that for this. I don't need that old study. I'm going to overwrite the study date. It's then going to have the same name. No, I'm going to make a new study so I know. All right, but normally I wouldn't put the date on something I was using all the time. I would say, oh, this is Ann's Club RMD study, and I would just keep updating that one. Create a study or overwrite it, excuse me, or create a brand new one. Either way, refresh the data. Now I have 3/4 into the recent year, most recently reported uh, was just a little while ago. I don't know what, oh, March of 2024. And you can see that while all the data has been refreshed, our forecasts are still there, 8%, earnings, 9%. You know, we can go right to the end of the story. Oh, yeah, it must have gone up in price because our potential return went down a bit using these same things, these same forecasts. But of course, you would want to review your forecast, but that is refreshing the data, and that is where you find that under Data Refresh Study. That is all I think I wanted to discuss. I'm going to pause here briefly, Susie, before I have just a couple things to finish up on the PowerPoint and see if we have any questions.
We are answering questions in the back room, so we're all
You
good,
guys
Ann.
are awesome. And thank you, Roy Chastain, and thank you, Carol Thine and Susie Artsberger. You guys are doing an outstanding job. All right, so let me go back to my PowerPoint, and we're just going to wrap this up, guys. And I'm going to wrap it up by giving you lots more help. Okay, so here I am in the toolbar. So we were in SSG. If you hit this question mark, and I went to the studies over here to find my collection of studies. Question mark is our help and information, and you're going to find all kinds of stuff there: quick start guides, reference documents, uh, links to videos, website links, all kinds of stuff. We've broken it down into like product, so CoreSSG stuff, SSG. Uh, I'm going to point you to this video learning library. I know it's little, but at the very bottom here, it's got a direct link to that intro to the SSG series that I talked about at the beginning. If you are a straight up beginner, that is a great place to start. So there's lots of information. I want to talk a little bit about these FAQs and feature requests because you can do a lot on your own. You can request new features by going to the link that was in that help tab, and you can enter your own feature request. You can vote on others. Uh, we look at this and make our decisions on where to go for updates and that kind of thing. So that's the feature requests. And also, when you're can't find what you're looking for, you're not sure what it is, don't forget to check our frequently asked questions. There's a lot of great information in here, and check that out as well. And I'll leave you with our phone number and email address for our Better Investing member services. They're your first source for help. And if they can't answer your question directly, they will forward it to the person that they think can. So, with that, final pause for any final questions, Susie?
We do not have any final questions because we've answered them all.
You guys are so awesome.
Oh,
Thank you
it's
so
just another
much.
one came in. How do I
Okay.
see this presentation again, Anne?
Ah, well, Larry, I see your question, and it will be posted in the video learning library tomorrow. And if anybody wants to know where that is, if you don't know, and you a lot of new members here, right? So,
Right.
Learning Center. Here I am, Learning Center, Video Learning Library. You can see it by category. It'll be under this core SSG. That's our tools. But really, if you just go to see all videos tomorrow, it'll be at the top of the list because they are listed in the most recent stuff, always goes up at the top. So
Excellent.
that's where you find it. And I hope you view that.
All right. We
All
are all
right.
caught up with
All right.
questions.
All right. Well, thank you. Thank you, Susie, for hosting, doing a great job with all those questions. Again, thank you to Roy and Carol in the back. And thank you guys for sharing your evening with us.
Yes.
Good night.
Thank you all and good night.
Good night.